What's going on, everybody? It's my favorite day of the week. It's Thor's Day, but it's a special Thor's Day because we got Rujira with us today. I hope everyone's having a great week. I love these ones. I love talking with our family. That's always the best live streams. We always, we interview guests and things like that, you guys, but it's always nice just to talk to the people who are in the trenches with us. It's a good way to keep everyone informed. So let's get this intro going for those who may not know what THORChain or Rujira is. So you guys, THORChain is the world's leading Bitcoin DEX. You can swap Bitcoin with 10 different blockchains across 40 different pools without using bridges or wrap tokens. Check it out at swap.thorchain.org, swap.thorchain.org. Anyone in the world can use THORChain. There is no account to open, there is no KYC required, and privacy is a human right. THORChain has two tokens, Rune and TCY. The fees for swapping on THORChain are paid in Rune, and that's where the yield comes from. The fees are deducted from the swap, so you don't need to own Rune to trade on THORChain. 10% of the protocol's revenue goes to TCY token holders. Remember to stake the TCY tokens in order to collect this yield. There are no inflationary block rewards on THORChain. The yield is real money paid by real users. Rune is also currently deflationary as 5% of the revenue is burned. THORChain is a full layer 1 with the ability to create smart contracts on it similar to Ethereum. This app layer is being developed by Rujira. Wink, wink. That is the topic for today, but moving on, you guys. If you need help with THORChain or Rujira in general, join the THORChain community Discord and Telegram group. Links for those are on THORChain.org. Please, you guys, follow THORChain on Facebook and Instagram. THORChain Contact on TikTok. We need 1,000 followers to live stream on those platforms. I'm really looking forward to those days. And always remember, guys, this podcast is for informational and educational purposes only and does not constitute financial, investment, or legal advice. And with that being said, how's it going, everybody? I hope everyone's having a great day. Kenton, what's going on? Do you got an update for us?
I guess maybe a little bit. Oh, I did. I guess a few little things. One, I apologize everyone for our tardiness. I was being anal about some stuff before we started to fix on Riverside. Apologies for last week. We couldn't get Riverside to stream on X. Some glitch, whatever happening. Looks like it's working now, so it should be good. Randy has really hit the ground running with meetings and everything, reaching out to new potential integrations, blockchains. I'm having to turn down meetings because I'm like, dude, I don't have time to be in all this stuff. So I need to focus, get things done. You guys notice like you have to get into flow state, focus on the same thing for a good 5-8 hours straight. You know what I mean? When you constantly you're breaking it up, you can't get in the flow. So I have to turn a lot of these meetings down because I'm like, he can do it. So I can get a few things done. For example, I don't know if you guys just saw that Define article just went live today. So this is something that I've been trying to get going, and it's just, I'm going to blame a lot of things on Reggie. Blame Canada. Is going to be my scapegoat here for some things, but and I'm Canadian. I can say that, guys. So, but yeah, it's something I'm just trying to get going with him, that we get an article out every week, and it wasn't happening. And so now we've got shout out to Lemur Labs guys for helping us with social media and everything. They've been great, so they're going to help with us start doing these articles. So hopefully, still going to take some time to iron out all the kinks and get all the processes in, but we're working with these guys writing the articles, and work with our SEO people, make sure the articles are written for LLMs, right? So SEO is basically done in a sense, right? Everything now is going to be for LLMs, right? Make sure and it's stuff like, having bullet points in an article, how descriptive is the title? Even apparently now the URL that we use. So on our blog posts, we need to make sure we have a good URL, because I guess now that LLMs are reading that now. So anyway, so getting everyone on the same page so we can start pushing this content out on a regular basis. And it's not just going to the void. It's there it is for humans, but also for LLMs. and then help. This is to help repair THORChain's brand online, right? So all those FUD articles, we can't remove them, but we can overwhelm them with positive propaganda. Um, and so yeah, so I'm just been working on that. The website is just kind of like, I'm sorry guys, it just keeps taking forever, and it's like any week now type deal. But yeah, we're close. We're close. It's just, yeah, bear with me. That's what I need to focus on. That's why I can't go to these meetings with Randy, because I gotta just stop and focus and get these things done. One thing I wanted to do a screen share, and we'll do this live with you. Um, you guys know I've been working with Masari. Um, so let me go here. Can you see Masari?
Yeah.
Yep.
You see it? Okay. So Masari has Ask Copilot. And this is anyone who's got an enterprise subscription with Masari has access to this. And I guess a lot of investors, funds, whatever, have Masari's Copilot connected to their internal Copilot, like in their offices and whatnot. So if we use it, I'm going to show you something here. See, it's a little bit slow. Question: What tell me if you can you see this? What are
Yes.
the top 10 crypto protocols by revenue?
And this is, this interface, this is like what institutions use, right? So this is really
Yeah.
cool.
Yeah.
What does this say? Based on the most
Uh,
recent available
oh,
data, the top protocol by revenue is THORChain, which generates $11,771 total transaction. Kenton,
just wait, just
Wow.
that's
wait. Get
Wow. This is beautiful.
a
Well
second.
done.
Sorry, guys. I said this earlier. Sometimes it gives you different responses.
that's still
Top
a flex
10.
though. I'm happy with that
By,
answer. But it didn't give you the top. Yeah.
okay, let me redo it. I know my
Protocol,
internet is slow.
yeah. Let me
Shoot.
see.
Let me
I
stop
think you need it.
response. Let's see. Here we go.
Yeah.
Can you guys see it okay? It's
Can you
not
can
too
you
small, is it?
control mouse wheel up maybe? Maybe zoom in a little bit. Oh, did I break everything by doing that?
I wonder if it
Cayman
doesn't.
Island internet is glorious.
I do, guys. I'm hard coded. I'm plugged in now. You know what? Why is it? It knows that I want to see THORChain. Shoot.
It tells you what you want to hear. It's a
Yeah, but
narcissistic
no.
AI.
Shoot, guys. This isn't. I should have pulled it up before. I've tested this a few times now. Um.
There is a grammatical mistake with when you spelled protocol. I don't know if that
Oh,
matters,
really?
but
Okay.
yeah, I
I
think you
mean,
need to
one more time. List of the top.
need a O and there you go. Oh well. All right, let's go, Copilot.
Let's see how it goes. I was all excited to do this live with you guys, and then okay, here it is. Here it is.
Okay, there we go.
Okay, there we go. So
Beautiful.
Booyaka, THORChain there at the bottom, number 10. That's okay. But notice this. It's total revenue 30 days. Shoot. So that hovers over. Before it was showing all time revenue, like in all history.
Uh-huh.
And THORChain still shows and 10th. So this is cool, guys, right? I think it's pretty cool.
This is wicked
It's very
cool.
cool. Yeah.
Yeah.
That's very
So
cool.
yeah, yeah. And if we go
the
to
delta with Bitcoin and other like a big chain is not that big, so
yeah,
it's quite nice.
and if you notice too, near is in there. It's wrong, and I've brought this up to to Masari. So we'll see what they do because Near is including their affiliate fees, right? Which
Ah,
those are third party fees, right?
right.
So I'm doing some gray hat marketing for us. Um, and so we'll see what if they fix it. But if we go to where is it? Data sets. So on the left here, this is like kind of the general nav bar everyone in Masari sees.
I love how cutthroat you are, Kenton. It's a good thing. It's a
Well,
good thing, buddy.
I'm gonna press them on it because I'm like, listen, if you guys are putting up fake numbers,
Yeah,
why should anyone use you or trust you, right? So I'm
yeah.
gonna don't I can be slippery, guys. But it's
This
it's in the it's well, I don't think it's slippery. It's honest.
it's
You
no,
know,
it's yeah, it's you're
like
increasing the approximation to truth. That's what we
yeah,
should do.
exactly. Okay,
Masari doesn't want bad
so
numbers. Go ahead.
apologies for how slow this is. So if we're in this data sets and we go to by network. Oh, is that it? Or is it overview? Oh, sorry. Networks all down here. Sorry, it's down here. This is a default page. I haven't set anything up.
Oh,
This is the default page.
number
And you can
9.
see THORChain number 9, and it automatically is sorting by 30-day fees. And
Very
Nice.
cool.
there we are, guys. And yeah, I'm still actually they did fix the spelling. I'm still on them to fix the logo. Um, but we're showing up. And
Great
yeah,
job.
yeah, Masari's been pretty good. They're responsive. Um, and just one other thing I just want to highlight to you. I see this spotlight and it says new. These spotlights are like a brand new feature by Masari. Like THORChain, we were literally our first customer. We're the first one.
Really?
Yeah, actually, I was letting Reggie and Scorch kind of take this on. So in a setting, in the first few meetings, I wasn't that present. But now that I'm taking it over, getting it done, they're like, yeah, THORChain, we were the first ones to sign up. Technically, Daba was second, but they actually finished getting all the data and everything on before us. I was really anal and on Masari about getting everything right. Like they were just like you can ask Ray Analytics. Shout out to Ray. He helped provide a lot of the API endpoints. And I'm like, guys, this is wrong. There's too many decimals here. We need a decimal there. This is the wrong feed, blah, blah, blah. So we went back and forth so many times. It took a few months to get our dashboard dialed in. So Daba technically beat us. They were technically the first one to have it live, but we were the first ones to sign the contract. And Ethereum is the third. So and I guess so. This is like Masari's. What they're going to be really selling here going forward. And I asked them like, well, if you sell more, you get all these other protocols. Are we going to be, are we going to get bumped? Right? They said no. We should stay at the top, and they're going to get added below us.
Awesome.
So we should stay
Awesome.
at the top.
Nice.
Um, who knows? We'll see. Maybe once they get enough people going, maybe you pay an extra premium to be at the top or whatever, right? But for now, we're here, right? And yeah, so this is just exact. This it's nice to show you guys something that there's some fruits to my labor, and I am yeah. So we'll and I saw those tweets about the Artemis graph. People are complaining again. THORChain isn't on it. Like always, guys, I see it. I agree. Chad saw it and reached out to me. He's like, Kenton, we got to get on here. I'm like, duh, I know. But they're like 100 grand a year for each one of these platforms. And so I told him like, I want to do it. It's on our list, but I got, the marketing budget. We only have 200 grand in our kitty right now. Right. We're just like, I'm trying to save it for, I'm trying to manage it, like, kind of move it around. Like, I
You want
think
the
it's
most
better.
bang for your buck, right? You
Yeah,
want
yeah, yeah. I think
exactly.
we should try to do some paid ads first, right, before we get on all these platforms.
Yeah.
So this is how I'm managing it, and then once we have more money, then we can afford to do it. But I told Chad, I'm like, listen, we should, if the treasury is going to pay for this, I'll do the work. I'll get it all done. And when we should, I think we should. Like it's we have to spend some money, right?
Yeah.
There's no ways around it. So I'm hoping with Chad and Alex, getting into the treasury, getting it organized, seeing what's what, that I can give them to, spend the money on it. So fingers crossed, guys. We can get these what's in Masari. We get the same thing in Artemis, Token Terminal, and Blockworks. I think they'll be those like the top three to get in. Um, and then that's how we start showing up for investors, right? People doing research. That's how we start coming up in results. Just like people are using AI. What's the best way to swap Bitcoin for ETH? We need THORChain to start showing up, right?
Yep.
So, and the only way to do that, we have to get ourselves out there. We got to pay to get the content there. So, um, yeah. So that's what I'm working on.
Hey, and we always have updates, and I'm really glad you did that because the community often knows you're working. But I'm glad you did that because it just shows people how much work is involved behind the scenes. Because I see you grinding every day, constantly talking to these third parties like Masari. You got to get the information right. Use this. No, that's incorrect. It's a lot of follow. It's a lot of back and forth. It's a lot of work. So
It
thank you very much for your
it
effort.
is, and it's guys. I can't tell you. It's so frustrating. I literally have to double check everything.
Yes.
I send something to someone. They're like, "Oh yeah, it's done." I have to go check
Mm-hmm.
because 3/4 of the time it's not, or it's half done. And then I gotta explain to them what's missing, why it's wrong. Then I have to go get a link to prove that this is accurate or whatever. And it's just like constant, it's like babysitting a 2-year-old. It's just constant attention.
Yes.
And but the nice thing is once these things get done, then they should be done, right? Then
Yes.
I shouldn't have to be on it as much and I can focus elsewhere. But these kind of things have just like been dragging out. I just need to stop and get them finished before I can start anything else. So, yeah,
Yeah, well, good job. That now Masari is always going to be working in the background for us. That's such a
yeah,
powerful platform. So good job,
yeah.
Kenton. Is there anything else, or do you think we should transition?
Um, good. I remembered. Bitcoin Las
Ha!
Vegas people. If you're going to be there, come join us. Chad Barefoot is going to come. You don't have to come see me or Denny. We don't care. You don't care about us, but come see
I know.
Chad. Our new guy, Randy, new business dev, he's going to be there. He's a really nice guy. It'd be nice to meet him in person. Um, Pragmatic Monkey, you going to be there?
No, no, no.
No?
I wish, but it's not the right time. Like we run
Yeah.
on a very tight budgets.
Yeah.
We cannot
Yeah.
really afford now to spend big flight tickets to go to
Yeah.
Las Vegas. This will come in due time. But for now, it's a building. Then once we start to generate decent revenue, we can start to relax a bit more.
Yeah. And if anyone's curious, I'm paying my own way. I'm going for fun. I'm assuming you are too, Denny. We're not
Yes.
paying for you.
I don't get. I'm not
So
subsidized at
it's
all.
yeah, but for us, it's easy for us. I know you're over across the pond,
Yeah.
so for us it's easy to go. And I have friends going, so I'm gonna go out, hang out, try and have some fun in Vegas. So yeah, but yeah, well, I gotta get the link for that meetup. And I can
Oh yeah.
post it. So please RSVP people. Even if you're a maybe, please put maybe so that I can get an idea. Because I need to have um for a venue, right? And so see, I see 16 yes and 2
Wow.
maybes.
Nice.
So on
I
one
know a
hand,
lot
it'd
of.
be sorry.
It's always more people that come because a lot of people find out about it when we're all in Vegas and we're talking about, hey, there's a
Yeah,
THORChain meetup, right? And so
yeah,
just more people end up just flowing in. So
yeah,
that's 16 is actually a pretty good. Those 16 usually are going to bring someone else.
yeah. So yeah. So yeah, it'd be great, people. Great to see everyone. Meet everyone in person. It'd be fun.
Such a good
Um,
thing to do. Such a good thing
yeah,
to do. And one day, Pragmatic Monkey, we will get together as well. I
Definitely.
know.
yeah,
Now,
I
the
know.
fact that it did US make it a bit harder, but
Of course.
it's gonna happen. Just a matter of time.
yeah,
Absolutely. Well, do you think, Kenton, now we get ready to get to our main
yeah,
topic?
yeah. Let's stop talking. Let PM Pragmatic jump into it. Yeah. What do you got for us, man?
Yeah, so maybe just sharing a quick update and then we can dive in. But last few weeks have been really about not the most exciting stuff, but bug hunting and fixing. So we did a big release of our order book decks fin 1.2, which one of the big change in there. It had a few major changes, like it allowed us to enable the automatic arbitrage between the various liquidity sources we aggregate in the order book, including the base layer liquidity via the virtualization strategy. We have talked about that many times before. But it also added CCL, custom consolidated liquidity. So that was a big change. And we also added the IMM fee, which allow Rujira and THORChain to make money every time there is some swap from IMM strategies to real user or to IMM strategy. Because eventually, most of the trading volumes, just like in any financial place, is going to come from automatic trading. And the way we do that efficiently is with the automated market making strategy that we build on top of the order book. And so this there were some big architectural change involved, and following that, we realized like we tested that, of course, before releasing live, but you never notice till you are in actually real live situation. And then once it started to go live, we realized it was some issues, like some pair were incurring some small deficits over time. So we have been hunting down bugs. We realized a few other like issues with CCL along the way. We have solved most of it, but there's still one little. Yesterday I thought we were done, but we realized it was still some leakage somewhere, and I think that now. We have the Firo and Ans on its full on at the moment. I think we finally got to the bottom of this. So just a matter of now,
Who,
well,
who,
we know the
who,
source, we need to patch it, and then hopefully, like in the next day or so, we can release yet another version. So from one version to the next, we had to we had to change the interface, and it bumped the version to 2.0 just because of how software versioning works. So one more little version bump, and hopefully we are finally there, and then we can go back to focusing on. So next big step will be the rollout of CCN with the actual UI, and that will be where things start to get really interesting. It will allow people to put asset that works the same way you could do in base layer put, but with much more custom strategies, and generate returns on any pair of assets that you want with very custom curve, custom fees. You can separate the yield from the principal or keep it compounding inside. It's very versatile, very flexible tool. And once it's live, I'll be very, very delighted to observe the live stream and show you a bit around. And one of the stuff I've been doing, actually, I started that because I wanted to test some of the assumptions we are making, like some of the issue we are having with Fin. I wanted to test for myself. So I did my first serious vibe coding projects, and I built a back tester for CCL using real, like 1 minute data from the data we archive from the order book. And so it's still like a little pet project. It's still, I'm going to improve it a bit more, and then I will make it available for the community. But it's super cool. It's really nice. Like you will be able to effectively select whatever pair, play with your range, do multiple scenario, then play, click a little backtest button, and it gives you approximately it gives you actually very precisely. It's mimicking. It's built in Rust. It's mimicking the logic of the contract very closely. Of course, because it uses 1 minute candles, like you always have trade-off performance versus accuracy. I'm hinted more, really very much more towards accuracy and performance, but you still like, you compress the time to 1 minute candle, which is already very granular, but still not like a block by block 6-second candle. So it's not perfect, but it's very more than enough to make a very I would say, accurate expectation. And it's very promising. So I was playing with, for example, like a Bitcoin USDC pair. You were setting like a fairly wide range still, but the way it works with like fairly conservative, I would say, parameters, I think we can easily get like to a 20% plus sustainable APR just from trading the volatility effectively. And then, of course, the more you tighten your range, or the more you go, well, there is a sweet spot to find between how tight or wide is your range and how much spread you set between your orders. But you can get to a much higher APR, of course. But then, of course, when you get out of range, you have to be happy to be 100% in either the base asset or the quote assets. So there are some trade-off here, but it's going to open the door to do a lot of very cool stuff. Juice up trading volumes, of course. It's going to start to create this counterparty liquidity to arbitrage the base layer pool via the virtualization strategy. And then that's very exciting. Like I'm enjoying building this stuff very much. Looking forward to share it with the community, and hopefully not too long, or maybe even at the same time as we release CCL. Also CCL, like all the wiring, like, it has been a very painful process to like people don't realize what it's funny. Like you are talking about what takes time and stuff that don't go as planned, and your website that is 1 week away from now, anytime. Like this is the reality of, well, a lot of businesses, but software development for sure.
Well, but our static website should be much easier to get across the line than AppLayer. So
yeah,
for sure.
Exactly. Like, but it's good. I give you context on
I
why
appreciate it. Thank you.
stuff
Yeah.
always take more time, and
Yeah.
and people often don't realize what's the hardest part in all that. And I mean, writing the smart contract is relatively fast, but then it's all what come after that, like also testing, the refinement, but also the wiring of it to the UI, how like you connect it to the analytics, you track the right metrics and all this. It's much more complicated than just doing one smart contract and boom, it's there. Especially if you want to offer a good UX. And the cool stuff is we will have like very nice analytics as well. So you'll be able, so Kenton, you are from TradFi, you are familiar with metrics like not just APR, but money multiple and DPI and this kind of realize returns. Well, we will have, that's how we are going to present this, like with little table, like, where you will be able to see your initial invested capital, how much yield you have claimed, so the realized value, or taken out of your LP, how much is the current value of your position, and calculate also this metric. So it's going to be also very helpful for anyone, like, because a lot of people go into DeFi and they start using the tools, but if you don't have your own spreadsheet and start to monitor everything and stick to it, you actually kind of fly blind. And the issue is, if you have a lot of different positions, it starts to become a lot of manual works. And the fact of that we can offer that built into the front end, I think it's going to be a very, very nice feature for people. And we have like a lot more idea of how to make that even more appealing. Like the end game really here is the tools we are building is we democratize access to wealth creation, to broader sense. Like really, like we are providing tools, like whether it's liquidation or it's market making or it's borrowing and lending, like all of that, it's providing tools that allow you to try to catch up with the social bad life you may have, or like trying like we have a society with an ever increasing wealth gap, because the model is built that the more assets you accumulate, the more you can compound your wealth on those assets, plus you can borrow against those, so you get a demultiplied impact, and it's getting harder and harder for the average person to catch up. Well, at least here we put, and if you want to access any stuff like that are fancy, like a fund, a hedge fund or private equity fund that may deliver you 15-20% annual return, you will not even be allowed to get this opportunity unless you are an accredited investor and you already have at least 250 thousand of assets and an income of X. It's fucking crazy. Like the game is designed to fuck you up. And on top of that, you you get that. So you get fucked because we deny you access to opportunities that will allow you to just at least compound at the same rate as people who have money. You also cannot borrow as much because you don't have assets to borrow against, which allow you to compound even more money. And you get double fucked because you also get fucked by the fact that our entire monetary system is fiat based. It's so money come into existence in the form of debt. And so these debts mean that we, over time, always increase the quantity of money because we need that to sustain the Ponzi scheme and keep refinancing the existing debt plus repay, pay the new interests. And so if you have assets in infinite supply, whether it's real estate, stocks, or Bitcoin, you preserve and mechanically increase your wealth over time just because of the denominator effect. Now there is more dollar to value your assets, so mechanically everything else being equal, your asset are worth more. And so if you don't have those assets, you get further diluted over time. So we deny you the opportunities that allow you to compound at a top of class rate, and we dilute you by creating always more money into the system, and without you realizing you are being taxed every day. And so this is like we get to a point where most people start to feel it really, and that's why we see the financial nihilism and the meme coins explode and all that. It's just like a newer generation that are like, fuck, I'm not gonna make it anyways if I walk out, so I may as well gamble and hope for the best. Well, what we try to do here is really creating tools that try to level the playing field a bit. And that's really going to be, I think, the first one that really make a difference and where you can track your performance. And effectively, the end game here is like start to build something in a fully decentralized way that allows you to build a complementary stream of income for yourself and use that to catch up. You can really treat your investment in this DeFi as a business, and we give you all the tool to do that. So that's what we are building now. That's hopefully CCN is coming very soon, and yeah, after that will be another strategy that's also I think it's gonna be very very cool
Will
and
you
use up
guys do some like articles or videos on like how to set that up so that anyone can someone
yeah.
for the first
So
time is there if no one has any experience in this but they like I want to
uh,
learn how to do this. I want to play with it. That they'll be able to go do it.
that would be. I really hope all of you try it. And yeah, we are gonna do a lot of materials once it's ready. Like there is no point doing it now. Like we are still finalizing the things, and the UI is not even fully wired. But once it's there, yeah. I wanna do a live stream just on that with you, Dennis, probably, or like we can do it together with you, Canton as well. Just walking through the step, like explaining a bit how it works, the different possible strategies, what it looks like. You will have preset stuff, but you will also be able to go wild and do your own things, like showing also with the backtester, can you play different scenario? What does it look like? It's so yeah, like we will have to do a lot of education, but the idea is really to make something that at the end remain accessible. Of course, like it's very flexible, but you have some preset option. You can just do that if you want. I personally always advise people to set their range at places where they're comfortable to do, rather than just using blindly preset settings. But that's possible. I also open the landscape for a lot of people to come and build strategy on top. So a lot of people or AI agents, and we are also working partly on that, like creating those skill files across the ecosystem and making sure that we make all of these apps AI agent friendly, so people can just start to spin out their own agents and try to ascend to handle a position for them. Of course, you will have Rujira, which will be also building on top of that and creating those acting as an intermediary between users just looking for solution and having AI helping you or any sort of automation to help you manage your position if you don't want to do it yourself.
I have a
So yeah.
question about AI. So like I was talking to IBIC, the unstoppable guys, behind our front end, swap.thorchain.org. And about, we have to make this accessible for AI agents, how do we do it? And he's saying the best, what we need to do is get like like a THORChain, a Rujira, like SDK library in these LLM models or in these Git depositories or whatever, so that when someone goes and like downloads an AI agent, they're pulling all these libraries, and Rujira is one of them, THORChain is one of them,
Mm.
and then they go set up their AI agent to go do stuff, whatever. And THORChain and Rujira is like just part of the package
Mm.
that's gone up. And then if they're using an AI agent to set up trades or do whatever, we're in that default flow. No different than having, say, THORChain and SwapKit, or on Ledger,
Mm.
that we're just part of that list of exchanges where the user can trade from. Is that right? Is that the way you see it too?
Yes,
Or do you see it
I'm
a
not
bit
sure if
differently? Or
it's a
yeah,
SDK, like it's on our side we call it CLI, but effectively, yes, that's creating an interface that is very easy to access for agents with predefined config. So an agent, like right now, we're writing the skill files, and they can see how to like take a multi-sig wallet and then call the contract with this or this function, and it's gonna do X or Y. But it's still like quite a few steps they need to take. And then you can embed a few of those steps into a CLI where the agent can just send a command, deposits collateral or take loan or swap or do whatever. And that makes them make it even more easy for them. So I guess that's what they mean by SDK. That's just different wording. But
yeah,
really have,
no, no, no.
yeah.
I could be. Please tell me that I say something wrong. Like my lizard brain. I'm not a dev, right? So I don't know all the terms. Um, so
I'm no
yeah,
expert either, but we have one GP with not GP Tor, GP from Nami, who is quite into that, who is helping a lot with everything related to AI. He has been doing all the skip
that's
files,
great.
and he understands this
It
nicely.
it's
So
it's so important. Like Randy and Chad and I had a call the other day, and we're talking about it, and I was really trying to like grind it, give Chad the gears and grind him like we have to position THORChain and Rujira as like AI friendly, that all
mm,
the AI bots can use us. Even if you think AI is dumb or whatever, it doesn't matter, because the narrative is already out there that there's going to be more AI agents than humans, right?
mm. Really,
And it
already
like,
more that I did not know, but
well, no, no, no. There's
that,
that narrative. Like, people are already saying this. I'm not saying we're there yet, but um, and you got to think from an investor's point of view. You look at what's the upside potential, what's my blue sky,
mm,
what's the most it could be, right? And so for THORChain and not just THORChain, but DeFi in general, this permissionless financial system, our total addressable market is the entire planet. 8
mm,
billion people can use DeFi, right? Whereas the current traditional financial system, 2 billion people maybe, you could probably
yeah.
argue it's more
Uh,
like 500 million, you know what I mean? So
Probably, yeah,
like,
exactly less than that, like because you are also bounded by geography in most cases and
yeah,
regulation, and yeah,
right?
it's
So like, it's fair to say the majority of people are excluded from
mm,
TradFi. And so DeFi, what its huge upside potential is, it's including all the people on the planet. So we got 8 billion people. Now, if there's more AI agents than humans, that's another 10, 15, 20 billion AI agents on top of those 8 billion humans that can use DeFi, right? And so now the numbers, like you start adding all this up, that's what when you see like, oh, it's a crazy valuation. Why is it so expensive? Like
mm,
Tesla, for example, like why it's so worth so much? Like people are they're looking so far into the future, seeing like, you know, and they're discounting that to today.
mm,
And whatever that delta is what they're willing to pay for the
mm,
investment, right? So we have to put it in people's minds that not only can THORChain handle all of humanity, it can handle, sorry, and Rujira, it can handle all of humanity and all of AI. All the
mm,
AI agents can tap into Rujira, can tap into THORChain. And then that upside potential in the future that potential in the future is even bigger, which should justify a higher price today.
mm.
So Yeah, this is if what I'm saying is the first time anyone's listening is like ever thought of it like that, you got to stop and think this is exactly how investing works. It's not what it is worth today, it's what people think it could be worth tomorrow. And this is a uh, opportunity with THORChain and Rujira right now is the way we're being priced. It's like we're going to be nothing a few years from now. The market is pricing in zero growth
Mm.
in us, right? And it's like, all right, fine. Not all 8 billion humans and 18 billion AIs might not be using THORChain, but some of them are, right?
Mm.
Like it's not it doesn't have to be all of them, but some of them will be. So yeah, rant over.
No, that
No,
was really
I
bullish, Kenton.
Yeah.
Holy crap. That got me excited over here because I had the same thoughts. But go ahead, PM. I'll kick it to you.
no, yeah, I fully agree. I mean, uh, it seems already like we are still at the very start of this. Like, when was the first version of ChatGPT out? Like 2 years ago or something like that. It's the progress has been making. It's incredible. I can
Me-
totally see how in the very close future, most of the transaction, especially on chain, like it's such a much more convenient environment for AI to trade. Like they are not gonna fucking open bank account at Wells Fargo or wherever. Oh, they are gonna use permissionless DeFi rails, and that was actually it's funny. Like if you go on the Rujira website, you know what our initial tagline. That's what it is up to now. We are gonna change it, but it's still like Rujira building the omni-chain DeFi rail for human and machines. That was really
Nice.
the vision from the start. Like AI is becoming big, and we are gonna provide the rails for agents to do all sorts of things. And I think we'd be very well positioned for that because first, thanks to THORChain, we have access to DeFi with native assets and from all those connected chains, so that's quite cool. But also, I think the level, everything is open source, not just so we have three different layers. Effectively, you have the protocol layer, the smart contracts. Then on top of that, you have two things. You have an API that kind of and a database that records certain things on chain and do some calculation and set up data back and forth from the protocol and to the front end, and then you have the front end. And the API part, I think, here is also very important because those agents, like for example, for CCL position, we are gonna index the individual performance of each position, and then we are gonna show some form of leaderboards where you can see all the positions with all the parameters, and you can rank by APR, by money multiple, by whatever, and you can see what perform best. And that's also a very good source of information for humans, but also for agents to see, oh, actually, what has been working best. I can look at this huge amount of data, and now I can do some things that for human would take a lot of time, be very complicated. But look at, oh, what was the price during this period? What was the performance during that period? Okay, so maybe I can kind of find some market cycles or whatever metrics that most human will not see, but they can find patterns into the noise and come up with some strategy to allocate capital more efficiently than a human would. So it's I think it's also it's going to be a very important competitive advantage to not just provide the basic protocol layer, but also to provide the data on top of this protocol to help this machine make informed decisions. And I don't know of any other protocol that is doing that the way we are building it now. So
Really?
that I think.
This is
Really?
No,
0 to
like,
1. No.
have you seen like, for example, if you go on Uniswap, which is the biggest DEX, like the only data point you see, well, you see three data points. You see the current value of your position at this point in time, not over time, because it takes a lot of data and cost to index that. And then you see the current value of the yield you haven't claimed. And you see a measure of APR, which is, I think, a blended average across the pool you are in. It doesn't reflect your individual position. So it's completely off. If you have a very concentrated position, your APR will be much higher. If you have a very wide one, it will be much lower. So it's very like not data rich. And from the moment you claim your yield, it's gone, and there is no record of that. Well, you can go on chain and look at the claim transaction for a given wallet and try to find the price of that. But like if you want to do that for all the wallet, all the user, like it's a massive amount of work even for an AI, and like a lot of consumption of data, third-party data. And another thing that I have learned speaking with internally with about AI is that agents like the path of least resistance, because also everything they do consume tokens. And so that's exactly why the SDK you were mentioning earlier, what we call CLI, is important, because we reduce the path of this resistance. They could still figure out how to create a wallet which is multi-sig and how to interact with the contract and do XYZ. But if we can do all of that in one little line, suddenly it's cheaper for them, and so it's more accessible, and they are more likely to use it. And it's the exact same, I think, with an even bigger impact when it comes to data, because if you want to build this data from scratch and looking at a block explorer, which you could probably do on Ethereum because you have like archive nodes that's run through the entire chain history that are publicly available, but it's going to be like an incredible amount of compute and tokens required to complete this task. And so I think this will also apply for data, and this will also be a competitive edge.
So, PM, if you guys are working on this CLI for Rujira, and the Unstoppable guys are thinking about doing something for THORChain, like, is this work being duplicated, or they could actually
No,
hinder each other? Like, should we put you guys in touch so you can talk and work together,
so
or
we
is it
haven't
good to do
started
your
that. And no, for
Okay,
now, no. Like this is just what we have planned. Okay, we are gonna need that. I think
okay,
Hans may have hinted that he may do some stuff around it, but for now, no. Like this, I was explaining again earlier to someone who was complaining again about timeline again. Like we are still in the phase we have built last year. We have built. Imagine like Rujira is a house built on THORChain. And last year, we built the foundation that connects the house to the ground, which is THORChain. Now we are like building the walls, putting the roof on it. We are still finding, oh, actually, maybe we need a little pipe more here for elixir, for eating or whatever. You can enter and exit the house, but it's not already like you don't have the nice flooring yet. You don't have the wall painted and the decoration. Like we'll come to that later. Some stuff like are more urgent than others, and like maybe CLI will come earlier before some other things. But we are still in the phase for now where we need to build the wall correctly, and we need to have to make sure the roof is not going to move, and then we'll move on to making all of that more accessible for AI and for humans and all those
okay.
things. But
So
now, like
if we do something on the THORChain side, we get something going, we should. And then is it something that you guys could add to or collaborate on, or would you still do something
yeah, no,
separate?
I think it would make total sense to have a single interface, or like I'm not sure what's the best way to do that, but yeah, there is definitely like we'll need a technical conversation with like
Okay.
having Hans to speak. That would be the most relevant to see what architecturally makes sense. But I think having one single package for THORChain Rujira is the way to go.
Yeah.
I would expect the THORChain one would be relatively simpler, just because you have less things that you can do at the base layer. But yeah, at the end, it's the same entity, it's the same flow, it's the same chain. So yeah, it would not make sense to have different package.
Okay.
So yeah.
So maybe it's good we get ours going. Should be simpler. Maybe we already see it kind of being used, and we'll kind of know if it's working, what's not. We've ironed out some bugs. Then by the time you guys are ready, you can come add to it. We've got like, I'm assuming it's going to be some effort to try and get this CLI approved in these libraries or whatever they're called. I can't imagine can anybody
Okay.
contribute to these things?
So
Um,
that part I'm not familiar with. So when you say you get that those approved uh, as part of other libraries, do you know which? Are we talking about agent framework like Elisa OS or this type of things? Or
dude, I know enough to sound stupid.
okay,
So,
yeah,
don't
okay,
trust think that I know what I'm talking about. I don't. I'm barely, dude. I'm worse than ChatGPT right now. I'm just barely stringing words together that make sense. So,
Okay,
I don't know what's
there is
involved.
this extra step where actually you need to get your SDK effectively integrated into other stuff. Okay, so yeah, I think this would make even more sense to to collaborate, make sure we have only one entry points for everyone.
Okay,
So
cool.
yeah, definitely. Let's like I mean, if you are starting on that anyway, add me to the group chat and I'll see what makes sense and
Okay,
when to get the devs involved on our
all
side.
right. Okay. I'll stop. Patriot. I'll let you jump in if yeah.
Yeah, I just listened to what you're saying, PM, and I a lot of thing when it comes to investment is how do you know you're onto something, right? I think that's a common theme. Investors, they want to find the next big thing, and I think a big indicator is when you're actively building the thing you're building, and you're encountering problems you would have never anticipated, just error after error, issue after issue, and that's because you are basically treading unknown waters. You are carving a path through a jungle that's never happened before. I mean, we have a decentralized app layer that is fully auditable top to down. There is no centralized component, enshrined Oracle, blah, 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 right? It's very powerful. So I'm very patient with this because I know what you guys are doing is really big. There is one question, and this is a really hard question. I think it's a hard question. I don't understand this. So I'm gonna do my best and I'm gonna hopefully kick it to you, PM, maybe break it down a little bit. So before I ask it, though, I got to break some things down. So the question really is between the relationship between rapid swaps and arbitrage on the app layer. Okay. And so just to let the audience know, THORChain has something called a streaming swap where you take one swap and you break it up into many blocks, right? It allows arbitrageurs to rebalance the pools. A rapid swap, which has been alive for 4 days, and we're up to $2.5 million
Ooh.
in volume, which is very impressive for 4 days. The arbitrageurs have learned how to do it. But basically, a rapid swap is like a streaming swap on steroids where you could do multiple swaps intra-block, within the block, if that makes sense. Now, that does not improve the price execution on THORChain, but it makes THORChain faster. And on the first value, we're twice as fast, right? So there's that. We now have faster volume going through THORChain. Very powerful. Now, on the app layer, arbitrageurs can also use the secured assets, right, to arbitrage. And this actually, as far as I understand, will make our quotes better. So just check it out. This is what I'm trying to get to. You have rapid swaps faster. You have arbitrage on the app layer, which means much better price execution potentially. The thing that people ask me and the thing that I don't understand is how do these things touch each other? Because there are rapid swaps happening on the base layer. Arbitrage is happening on the app layer. So it's like, can you break it down from the perspective of an arbitrager? Are these things happening concurrently? Would one arbitrager be
So
using both things at the same time? Like
so
how does that work?
so we are internalizing the arbitrage as part of the ecosystem activity. So I mean, an arbitrager could come and also have a PTC on Rujira and sell it in the liquidity of the order book, and at the same time buy it cheaper on the base layer. That's a possibility, but realistically, they won't be able to compete with the virtualization strategy, which gives that to everybody, anybody that use Rujira, or the Ruji token, or that is another operator on THORChain, effectively partially on a stream of the revenue created by this flow. And what the virtualization strategy does is this mechanism. So you have to understand how things work on THORChain, like the swaps. It's not like on another chain when you can have MEV because the order of the transaction is defined by the node operators effectively. Here on THORChain, it's deterministic for base layer swaps. It's always ranked. They happen always at the end of the block, and it's always ranked from the highest fee to the lowest fee. So the network makes sense. Network prioritize whatever it's returning the more revenue. And because of that, you cannot have atomicity between the base layer and the app layer. And that's why we came up with a virtualization strategy. So you could not, you cannot have MEV happening like somebody buying and selling on the app layer, like inside the same block. I'm gonna buy on the app layer where it's cheap and sell on the base layer where it's less cheap, and then we keep going stuff. So that's not possible because transaction happen in a certain order at the end of the block on THORChain, and after all the transaction from the base layer, the app layer. So we have the virtualization strategy, which use the lending market as a bridge financing for the duration of a block, effectively. And it's going to say, oh, it can look at the state of the base layer pool, say, oh, if you want to buy this quantity of Bitcoin for this amount of USDC or RUN or whatever, you can get that on the base layer. So I'm going to borrow this output that you could get, give it back to you, taking a little premium because, of course, you always have incertitude in the execution inside the block. And now you can do your stuff on Rujira, get via the virtualization strategy access to the base layer liquidity, and keep doing other things. Now, where this become and so that allow atomicity indirectly with the base layer liquidity inside the order book. And then at the end of the block, the virtualization strategy is going to execute this base layer swap and get back whatever, if it was a USDC for BTC, it's going to get back the USDC on the base layer. So let's do the full swap. Somebody wants to buy on the app layer BTC with USDC. The virtualization strategy is going to look how much BTC can get for this quantity of USDC on the base layer. It's going to borrow those BTC, give them, and fill the swap of the buyer, take the USDC, wait for the end of the block. At the end of the block, do the USDC swap on the base layer pools, get back the BTC, repay the loan, and hopefully keep a little margin most of the time at least. And by doing that now, how do we, so by doing that, you have an automatic, so another important innovation we did with Fin 1.2, 1.3, the latest version we released, was this automatic arbitrage at the end of the block. So the virtualization strategy is quoting every block based on the state of the base layer pool. And you will have other source of liquidity that live on the app layer. CCL will be the biggest one to start. And then you have also real user orders and other things. And every block at the end of the block, it will, or actually at the start of the block on Rujira, it will match all those different sources of liquidity. And if there is any overlap, the overlap is retained as protocol revenue, and then it flows into the revenue machine and is shared with THORChain and Rujira stackers. And so via this mechanism, we effectively arbitrage between the liquidity available on the app layer and the liquidity in the base layer pool. So whenever price deviates enough, and right now the deviation required is quite high because base layer impose a 10 bips fee per leg on secured asset transaction. So that means 20 bips at least. Plus we have the IAM fee of 2.5 bips. Plus we put 10% margin just in case of intra-block execution. So it's like you need still like a 32.5 bips or so deviation to trigger an arbitrage. But that's still like a much better execution than what you see. Remember, the article I published, we're looking at the typical deviation, and it was like 40 bips in average with over like 30% that were above like 60 bips. Or like, so there's a big gain that we can make by just always arbitraging just slightly above this 32.5 bips. And that will improve the pricing of the base layer. And that's also effectively how we are gonna improve. So that's just for the pricing part here. So, and the same mechanism of virtualization strategy, flowing liquidity back and forth between base layer pool and app layer, can also be used with rapid swaps. And that's how we also help on the speed of execution. So that's the second part of what we were asking about. Now, that's not live yet, but we are, after CCL is out, I think next big things we will focus on will be improving this virtualization strategy to make it aware a bit less. Now it's kind of quoting a bit blindly. And now next we want to make it aware of the liquidity not just the liquidity in the base layer pool, but also the state of the swap queue. And that from that moment, the liquidity, the virtualization strategy will be able to see, oh, actually there is this massive 5 million swap. And I have, so it will always be a function of how much liquidity we can grow at the AppLayer. The more we grow the liquidity, the more we can facilitate those volumes, those arbitrage and generate volume fees. And that's what I have been saying all along. Like it's really the biggest thing we should drive to grow is TVL in AMM pools. That's your biggest contributor to revenue. Will be clearer when I start to, when we have the analytics, and I can show you very precisely
You already
how it's
did. Yeah, that's basically ADR 24, which basically arbitrage alone, it just results in huge volume. But continue, sorry.
It's big, but yeah, like seeing it number would be interesting as well. And so now, like once we do this upgrade, now the virtualization strategy can say, oh, actually there is this big swap coming in. I have enough liquidity to price maybe half of this swap or the entire swap from the AppLayer liquidity. So instead of doing that by little chunk, currently it's the virtualization strategies price little chunk and like 2, 3, 4 chunks away from the center price of the books. And you will always typically, that this arbitrage will necessarily consume just the top of the first chunk. Now we can make a much, much bigger chunk because the virtualization strategy knows that there is this big swap coming in. And then at the end of the block, because he has quoted much more, it has borrowed much more for the vault. So it has also a dependency on how much liquidity there is in the vaults to facilitate this back and forth. And it borrows that and it feeds it in this swap, and it knows that it's going to be consumed via rapid swap in the same block. So now it can act effectively. It competes with external arbitrager, but internally, and using the liquidity provided on the AppLayer as a counterparty. And so because it competes with targeting a lower margin than your average arbitrager, and not necessarily because arbitrageurs are greedy, but just because the arbitrage loop can be closed much more efficiently because we do everything inside the one block effectively. Well, arbitrageurs have to take the risk that, okay, I'm buying now a THORChain, I need to move the funds to a centralized exchange to close the loop, or I need to have a stock of each asset on each side, on both sides. Like it's just not as efficient as doing everything inside the same block and inside the same ecosystem. So we can price also more aggressively, and because also we have a vested interest to see THORChain succeed and just try to maximize volume and revenue for everyone. We are like all tied to that. So bigger the volume of THORChain, the more we can get this arbitrage flow going and benefits on both sides. And so we can use that to improve both pricing because we price those arbitrage lower. And then that's once we have a bit of data and things are rolling out, I will be pushing to reduce the secure assets mean SIP fee from 10 bips to 5 bips to see the impact, because the more we reduce it, the more it should improve the pricing of the base layer, and the more it should improve volumes, because now you don't need to wait for as much deviation to arbitrage. So there will be a interesting optimization to be made there. And anyway, like the money, THORChain receive less from the secure asset mean slip fee. It will receive, so if this works and increase volumes and revenue on the AppLayer side, it will receive back that in the form of profit share with the AppLayer. So there will be interesting like dynamics to play with. That will be just parameter tweaking, and we'll get there. That will be the fun part. But that's so with that mechanism, we can improve both pricing, but also speed of execution. And by being just like any, effectively, you can think of the AppLayer via the virtualization strategy as an arbitrager of the base layer, just like any other arbitrager, except that instead of using Binance or an external liquidity sources to take the other side of the arbitrage, we use
the AppLayer.
The AppLayer liquidity, so it's an internal source of liquidity. So it's really like internalizing.
Is it like this meme with the elephant trunks holding each other's dick or whatever? Is it not like, because don't we need an external market to arbitrage?
No, it's not, because you need to build liquidity on the AppLayer. So that's the way actually that THORChain can scale TVL again, because the base layer pool cannot be scaled anymore post THOR5. And there is no magic. Like you can be counterparty of the swaps only if you have enough liquidity to take the other side. So you need liquidity on both sides. So we need to grow the liquidity of the AppLayer to be able to do that. The more we grow it, the more we grow the pie for everyone. So it's not the trunk of the elephant pumping itself. There is no circularity. And then also that's the beauty. You still need like external arbitrageurs that will always be there, because this system kind of auto balance with the liquidity on one side and the other up to a certain point. But if there is too much deviation on one side or another, that at some point the base layer won't be the app layer, so it won't be quoting anymore, or will be dry out and cannot take the other side. And that's where arbitrager needs to come in and push back. Like now, imagine like the app layer has been taking a lot of BTC from the base layer pool to the app layer liquidity via this arbitrage mechanism. And now there is actually in reality it would be like always tiny 0.5%, 1% deviation max. But now there is this little gap. And effectively, the THORChain ecosystem as a whole, AppLayer plus base layer liquidity, is missing Bitcoin. And so Bitcoin is more expensive there. And then you need the external arbitrager to come back and buy or whatever it's the direction, buy the Bitcoin and take the USDC or the other way around, depending on where it's in balance. But you always need external arbitrager to rebalance the pool. And that's like in a global open financial ecosystem, especially even more on blockchains. That's how it works at the end. Everything is connected. One little move of a butterfly there is going to have a ripple effect everywhere, plus or minus the fees. So as long as the deviation will be enough to cover all the fee and leave a little profit, you can be sure that an arbitrager somewhere will be there to capture that. And that's why it's beautiful. And that's why you want to build a machine that make money on volatility, because this is always going to be there. Like unless we get evolved into some crazy world where on the AI agents, super intelligence price everything, and we get to a market equilibrium where everything is priced at the exact price it should be, and nobody wants to transact anymore. But even that, like the world is not static. Like every new second, every new real world block, you will have some change. Someone will suddenly need to sell assets to buy a house or buy a car or pay for surgery. I don't know. So there will always be somebody doing some transaction, and that's always going to create an imbalance somewhere, which is going to flow throughout the entire ocean of liquidity that is the financial market. And so you want to build a system that make money on volatility. That's what we are doing here.
So my wheels are turning on that one. I was really doing my best to follow everything you say. And so I just want to try and make a simple statement. I'm trying to boil it down in simple words for people to understand. So with the app layer, because we have BTC in a vault, exogenous assets, there will be a secured version of that, right? So that vault of separate BTC for the secured assets, up to a point, you can think of that as a temporary Binance or something that you can arbitrage against. Up to a point, right? That's where the wind comes from. But then once there's an equilibrium there, then it can't work anymore. So the deeper the secured assets from the exogenous BTC, the more you can do, which helps the price execution. Is my understanding correct?
Yeah, that's correct. On one side, that's correct. The more BTC you have, the more BTC you have, the more you can be the counterparty of the base layer when somebody is actually buying BTC, and so taking BTC out of the base layer pool. And now there is an imbalance, and the app layer can take this BTC reserve of secure asset and move it back via the virtualization strategy into the base layer pool. And the other way around, if we also have like secure USDC, and if actually somebody is selling a lot of Bitcoin and buying a lot of Bitcoin and putting a lot of USDC, selling a lot of Bitcoin and taking a lot of USDC out, we can put back the USDC from the app layer into the base layer via the same mechanism. So it goes both ways. On every move of this wave, we collect a bit of fees, THORChain and Rujira. And so as long as it's keep being a wave that goes back and forth, the volatility of the market, we make money. The only extreme case is one of those assets goes to zero and never come back. Then you lose your capital. You end up holding the bag of the asset that is now worthless. But if you do that with mostly exogenous asset like BTC and the big stable coin, this risk is fairly low. If you start to list all sorts of crappy altcoin with no economics and high inflation, that's going to be another issue. But that's not the position where THORChain is at all.
Right. Okay. So I'm trying to think of simple ways to explain this to like an arbitrager, right? Because so would it be accurate to say that the arbitragers that take into account, I think it's maybe obvious question, but I just want to make sure my understanding is crystal clear. The
the
arbitragers.
arbitrager don't have to the AppLayer is effectively competing with arbitrager to rebalance the base layer pool. The arbitrager don't have to understand anything. Like the arbitrager can continue to arbitrage like they are doing and using rapid swap if it's there now to arbitrage more efficiently. But at the end, the Rujira, the AppLayer, via the virtualization strategy, is just another arbitrager. Arbitrager don't have to understand it. They can look to understand for curiosity purpose, but they don't have anything to do with that. The system, Rujira, is built to be an arbitrager itself via the virtualization strategy.
Okay, so arbitrage, so Rujira is, I'm so glad I asked this question, so I understand. I'm sorry if this is a stupid question, you guys, I do apologize.
No worries, it's complex stuff. It's not.
Yeah, so the AppLayer itself is the only party on that side of the arbitrage when it comes to rebalancing the pools of the vaults, right? Like an arbitrager can't hop on Rujira and start playing around with these tools. Is my understanding correct?
An arbitrager could, but he will have
but you'd be
competitive disadvantage because the virtualization strategy has all the IMM strategies have a 2.5 bips fee on top of it, and an arbitrager or anyone doing regular orders will have either 15 bips taker fee or a 7.5 bips maker fee. So there is by design, and also first because IMM strategy are doing most of the volume, so you want to lower the fee to maximize the volumes, and they provide a service that traditional user of orders don't. But also because by design, we want to internalize that we want to really, democratize access to wealth creation. That's part of it. Like now, if you're on Ruji or if you're on Rune, you get a share of those arbitrage profits internalized, and it doesn't mean like at the end, arbitragers, so probably they won't have much interest in arbitraging directly from the base layer to the AppLayer. I'm sure there would be some weird routes or stuff where it still makes sense, but it doesn't mean like they will disappear. Far from that. First, we'll always need them to rebalance whenever we have exhausted the liquidity on a certain site on the AppLayer. So there will be a constraint based on how much liquidity there is on the AppLayer, but also some of those may have better arbitrage opportunity because on Binance the price is dislocated in a different way compared to the AppLayer. So actually there is an opportunity there, and maybe they actually have even lower fees. A lot of the arbitragers do a lot of volume, so they are like sometimes at even zero pips tier fee or very close to that on certain centralized exchange. So they may still be able to get that. So really, like you have to see Rujira as the AppLayer is itself a participant in the arbitrage of the base layer via the virtualization strategy. It has an edge over other people who try to do that directly using the AppLayer liquidity to arbitrage the base layer, but it doesn't remove anything for the arbitrager from what they are used to. They can continue to arbitrage against external venues. Actually, there will always be a flow of arbitrage on external venue required to rebalance the pools when the full system, Rujira plus THORChain liquidity is in balance. And and that's it. And they may still be able to beat the AppLayer on arbitrage because they may have lower fees on their centralized exchange, or just because the price deviation there at a point in time is more favorable than the price deviation on the AppLayer liquidity.
Okay. I'm going to leave it there. Go ahead, Kenton.
You can keep if you want to keep going, but if
no, my brain's broken. Go ahead.
So I'm curious. I hear a lot of fees, PM. So like there's the secured asset fee, there's the maker taker fee. This starts adding up.
No, so,
I mean,
maker taker fee. I mean, if you are the AppLayer, that's if you are a user of the AppLayer. The IMM, so the virtualization strategy, has a different fee, which is much lower, 2.5 pips. But yeah, it adds up. Like we have had this conversation before. Like at the end, it adds up, and that's why like there is always a sweet spot to find between how much fee we charge and how much total revenue we collect. And I think we will have to, when the system is in place. I know Nine Family Arco was playing with that at some point. I think we'll have to revisit that and see. It's just looking to find an optimal. There is a moment where you can put zero fee and you will maybe get 100% of the volume, but it will make no sense because you don't make any money. You maybe set a 5% fee. The rare time, the price deviate more than 5%, you will get some volumes, but it will be very minor, but much bigger. And then there is a full world in
yeah,
between, and that's empirical,
yeah.
experimentation
Okay.
that would give us the answer. But I think
'Cause
currently, definitely there is like 10 bips on each legs and secured assets. It's a lot. So I think once like I want to also put in place at some point some analytics to replicate. This is going to be a lot of data. So I have to see with the team if it's doable in a efficient way. Like I mean, I have some idea how we could do that, but effectively some stats to monitor what I was showing in my article, which were analyses I did on Excel. I want to have a real-time dashboard that would show the quality of execution of THORChain, like tracking the execution price, the price of the pool at the end of 1 minute candle, let's say, versus Enshrine Oracle price, and look at the standard, the typical deviation. The closer it is, the better the execution from the base layer. And that would also be an interesting metric to look at. Besides revenue, it's also like quality of execution. And at the end, it's it should be linked. Like if when you can price more competitively, you should be getting better volumes. That's why NIA has been also taking quite a bit of market share. So this should play there. And then, of course, the more we reduce the fee, the more we should see this price of the base layer pool converge towards the general market price measured by Enshrine Oracle. But also, and so we may get more volumes, but also we'll be getting less revenue because to get more of those volume, we have to compress those fees. And then, yeah, it's really finding these sweet spots where, between volumes versus fees
I
that
think,
maximize revenue.
I never ever saw any final report or anything from the fee experiment last fall. But my understanding, what Cal told me, just kind of over the phone, was that what he was saying is that basically our volume is inelastic. I was getting mixed up. So no matter what the price is,
Mm.
we have the same volume.
Inelastic, yes. So
Yeah, and
people don't care
so
about the fee.
yeah, so in
Yeah.
theory, we should. He was saying in theory we should actually go to like 50 basis points,
No, uh,
and it's
but I think that's true just up to a certain level. And yeah,
yeah. Let me finish. So like, um, so you might think, okay, well, we should charge more, right? If that volume is going to go and we shall make more money. That's why October was a really good month yield wise for us because we're like 20, 40 bips or something. But that might be true of our current volume, but that won't be true of attracting new volume. And like, I think it'd be pretty short sighted. So like, I'm a huge fan of us lowering our fees, and like in my mind, I'm like, we don't even need to run a study. We just need to see like what is Binance, Coinbase doing, and we have to. Our goal should be meeting them. If we can match them, then we should start, sucking volume away from them, right? Because in my mind, I don't know how we can, unless we're at the same fee level as them or lower. I don't know how we're going to attract that volume, like arbitrage volume, like high frequency trading volume. The average retail users, that's fine. I'm sure we can command a premium for that. But for these ARB bots, it's just doesn't it just come down to fees. So
Yes, but I mean, again, like that's true if you want to maximize volumes purely, but not revenue. But there is, and remember, centralized exchange, they make money also not just on fees, they make money on liquidation, giving you crazy leverage and then liquidating you without you understanding why and taking half of your collateral. There was a way to make money. I think we still need to have a very pragmatic approach here and look at the end. What we want to maximize is revenue, is cash flow, and
Are
so
you suggesting that the like centralized exchanges, they might actually purposely have cheap fees, get people trading on them, and then they make the money on the forced liquidations? And
partly yes, but also like they have different fee tiers, so they can also internally effectively arbitrage and capture spreads between the on the volumes between people who have actually very low fees and do a lot of this churn and people who pay much more fees. Like they have, like we don't know. Reality is nobody knows unless you work on a centralized exchange and you are actually a developer there and you know exactly how the code works, which is very little people because it's a black box. Uh, but I'm pretty sure there are a lot of different shady stuff they do to make money at different level because nobody can verify, and it's very easy when you have a lot of different parties that have a rough understanding of their balances, but not a granular one every single second, to actually play on the change in price, the volatility again, to take a bit here, a bit there, and so yeah, uh, so I'm not sure like just trying to mimic their fee is the right thing. I think we should experiment once we have enough like liquidity on the AppLayer and we can really play. Let's start to do a little round of experiment again, and we can go like very low. The issue is if you really want to get, because it's also hyper market dependence. In period where we have very little volatility, you want to have low fees because things are not going to move much and you're not going to make much volume. So actually, the higher your fees, the more it's going to take to trigger volumes, to have enough deviation to make an arbitrage outcome. So you want to make that list for a few weeks. Like I think THORChain was doing just 1 week or 2 weeks. I think this is too short. But of course, it comes back to the cost because if it reduces a lot your volumes or your revenue, maybe you do a lot more volume, but your revenue for extended period, it's gonna be hurtful. So maybe, but I think maybe at the AppLayer we can be much more granular. So I think we will probably experiment by doing different, changing the fee on different pools, different pairs will have different fees at the same time. So overall, it's the same market volatility, but we can compare how things works and how ultimately it drives volumes of revenue. On the base layer, I don't think you can differentiate fee per pool plus yeah, no, the API I think quite net of fees, so that shouldn't matter for external consumers. But I don't think you can set up with this level of granularity. So yeah, it will need probably to be a bit longer experiments. But yeah, I think that's something we should do, and we can experiment super low, like 1 bips or 2 bips. But I'm pretty sure that will be a big drag in revenue, and I don't think it will be sufficient volume to compensate.
yeah,
Because
yeah.
at the end, like remember, like most of it is really like it's a volatility. Like what's the average volatility and how much can you maximize? Like what's the fee that will maximize the time like where there is enough deviation that you can capture your fees from this volume versus having to wait for longer because your fee is larger. But so you need more deviation. But when you capture it, it's more money. Like it's really yeah, a game of finding the balance for me more than trying to mimic centralized exchange.
So rapid swaps, maybe just I can't remember if I actually explained to people what they were. Just reminded rapid swaps. You can before on THORChain you can only place one swap per block. Now you can place two swaps within a block, and that's a setting. It's purposely set at two right now, and then this is affects L1 trades, secured assets, trade assets, right? Everything on THORChain, right? Um, what would happen if I think is the limit, what's the max we can go? Is it 8? 8 swaps per block, or is it actually unlimited?
I
And
didn't know there was a limit, but
I
I
thought
might
for
be wrong.
some I could be
Maybe you're
wrong too. I for some I have that in my head for some reason. But anyway, if limit or not, if we go to 3 to 4, 5, 10 swaps per block, would that make things much faster on AppLayer too? Would we see much more improved arbitrage, much better pricing?
Not,
Um,
it would not be I mean, it would be more volumes. Yeah, probably it will be net more volumes. It's just like things will get filled in bigger chunk at a time. So net, yeah, I guess you will see more volumes just because now you have fulfilled one thing in one block. And so currently, I think they are swap compensate each other so what rapid swap does effectively is you get somebody buying on one side, somebody selling on the other side. But if it happens in the same block, you can compensate back and forth. And instead of waiting one swap, you compensate one against others and wait the next block and compensate. You can say, oh, you are streaming on this side and you have 10 swap coming. You are streaming on this side and you have 12 swap coming. Well, it's 10, 10 of similar size. I'm going to ping pong back and forth between those two. And I'm going to fill as much as I can up to whatever. So currently just two back and forth. I don't think there's any, I don't know if there's any limits. Probably there is mechanically at some
I
point, but you can
remember. I
probably
think
do
I
much more.
remember. Yeah, so
But
I think what Chad's adds, I'm sorry, interrupt you, PM. I think the limit is it's a diminishing return, right? The more interswap you do per block adds computational burden, right? And the speed increase, like it asymptotes to 0%. Like want the value at 2, it's it takes half the time. Value at 3, it's 3 times, so it's 33%. Then value 4, it's 20%, and then it's I don't know 16% or whatever,
okay,
right?
so
And
there is a physical constraint due to the complexity of calculation that at some
it would
point
have
you reach the
it
limits.
it adds more burden to the
Mm,
network, just like to process
mm.
all this stuff internally. And so you increase the value, but the rate at which you increase the rate at which the speed increases goes down in a linear mathematical, well, not linear asymptotes, but you know what I mean. Yes, go ahead.
like
If it's
quadratic,
linear,
is
it's fine.
this the
If
function
it's
of Cosmos and Tendermint? It's the like adding more nodes makes things slower. The
There's that too, but just if you have more interest, like more interswaps per block, that just requires more more processing power, all that stuff. And then the more you add, it gets faster, but the rate of increase of the faster execution is less. So there's a magic there. Maybe it's 8, maybe it's 12, maybe
maybe
it's
that's
10.
maybe that's why I came up with that number then. Yeah,
Yeah, I think that's what it
yeah.
was. Go ahead, PM.
no,
Sorry.
okay, no, that makes sense. I wasn't aware of the details of this implementation and like the physical constraint of it effectively. So it's like you can say the base layer has a maximum capacity of blocks it can do, and I guess each back and forth increase is counted as one transaction, but actually it's not one transaction. It's I guess every back and forth is exponentially more computationally expensive, and so you get a limit there. Okay. Yeah, I mean, we will have to. I mean, that's more for answers for me in reality, but we will have to find like we will play with whatever are the rule of the game and the constraint. We just factor that in whatever we do with the vectorization strategy. So that's. But for us, yeah, I think it's a net positive. It allows to facilitate more like larger chunk of volumes in a single block. So it's good. And yeah, I don't know, like, yeah, I would guess that it can create some extra volumes, but honestly, I can't say
I
that
mean,
for
it's
We'll
not
sure.
it's
we'll ask
water.
Chad
No,
next. I just made
yeah.
a note for myself. We'll ask Chad next Thursday. Well, I'm sure he'll love to talk about it.
And you're
No,
welcome to join, PM, if you have questions too, right? And by the way, guys,
You're always welcome.
this is an open
that,
floor, guys. Like we put the link out there for someone wants to come up and ask a question. Like this is not just us three. If you want to join, have a question. I've been looking at your questions, guys, and you're trolling. The one question is when? Like,
when
yeah.
that's always the one question.
Start
I
spelling
know.
with an H, guys. Then we'll answer.
Yeah.
So maybe we do that. We get some questions.
Well, that was a big one there. Well, here's the thing. I'm actually seeing not a lot of questions, and please, guys, go to Rujira Telegram, or you can put it in the chat right here. Just tell if you have a question. But that was the big one I saw, was the relationship between rapid swaps and concentrated liquidity, or arbitrage, I should say. Um, man, so it's a new frontier. And I mean, there's comes a point where you guys are encountering problems that you did not anticipate, which is normal when you're building something that's never been built before. I just like to think what Kenton said earlier. He was talking about, 8 billion people, free access, and then the AI agents. I really think I think what it is, you guys correct me if I'm wrong, I just think we're that early. We are the first ones building this unique implementation, decentralized top down, no centralized component. We're focusing, and I think that was brilliant, PM, how you're focusing on the future, the AI agents. You want to make it as readily available. I think you guys are great thinkers. I want to thank you very much. You guys are doing a great job. And just keep going, keep doing what you're doing. And if there's something I can do better, to help educate, I'm doing what I can, but there's a delay between when you guys come up with something and when I understand it, and I'm doing my best, but it's really cutting edge stuff.
You are great, like most of you, and we are gonna do a teaching session when we have CCL, and then you will have plenty of things to
Yes.
to show around. That's gonna be an important one.
Yeah, I'm looking forward to that. I think just like what Grassroots Crypto does when he makes videos and he has like pictures, right? That's so helpful, because I'm trying to construct a mental model of everything, and I can sort of do it, but it's really harder. If I had pictures, that's good for everyone's brain, right? Like it just helps.
An old video that is still relevant of
Yeah.
how the virtualization strategy work.
Yeah. Yes. Okay. Okay, man, this has been I like this. I love doing this stuff. This is great. Kenton, is there anything else? Man.
No. This has been a lot. We could probably start wrapping it up, unless there's another topic or something you wanted to get
Yeah.
into,
Is there
pragmatic.
anything? Yeah.
Something else you want to talk about?
I think that's really it. Like right now, its priority is really fixing Finn. That's hopefully like now. I think we have the ultimate source. And by the way, it's good. Like from the outside, like I see a lot of people complaining on Telegram and all that, but this is good. It's happening early. It forces us to also improve the reliance of the system. So, for example, to pinpoint, we are struggling to understand what was going on exactly, because it's a very complex system with all those flow and those arbitrage between those different liquidity sources and the virtualization strategy. It's a lot of data to process. And we built this invariant scanner. And now we have a way to systematically check every block. Okay, in that block, those were all the transactions on this contract. This is all the flows that went in. That's the flows that went out. Does all the balance? Yes, no. If no, oh, okay, there is a deficit occurring there, and we can pinpoint stuff. So it makes also a better, more resilient infrastructure for us to tackle potential issue in the future as well. So that's really like the focus now. I mean, this is end-to-end with CCL. Once we have those two together, like next we will we'll release CCL. Like it's getting very close. UI, I saw it earlier. I starting to like. We changed also midway what initially it was going to be a different page. Now we are going to integrate it directly into Rujira, the order book. So you will have just your side panel where you normally place your order. You will have a button, and suddenly it become an interface to place CCL. You can still see your trading view chart. You will be able to move directly on the chart, your range, and you will see the liquidity distribution adjusting automatically. Like it's going to be very nice and yeah, very well. I think the thoughts and presented. And so yes, that will be the next big stuff. And yeah, once this is out, this is going to be a big step forward. Yeah, it took longer than expected, but that's for the best. And yeah, the back tester I built was also very helpful in pinpointing some difference in economic design. Like its contract was not behaving, or the CCL strategy was not behaving the way certainly I was expecting to behave. So we were able to fix that as well. So all those things, like, they are very important. Like you better be a bit late, but not rush things. And when they finally get out, when we say it's good to go, it's it has been battle tested already a bit, and people can go with more confidence with something that works as intended.
Yes, and that's 100% true. Build it right the first time. You guys are doing something that's never been done before. Just get it right. Now, I actually do have some questions I thought about, and I think these are important human questions. I'd say this to Kenton or anyone else. How is Hans? How is the team? Like I was like ask Kenton. Everyone's working really hard. Everyone's really grinding. Make sure everyone's mental health is okay. So how's Hans doing? Is he doing okay? If he needs a break,
Oh,
you tell him to take a break. Okay.
no, yeah,
I know he's
of course.
excited.
I really try to protect him as much as I can. Uh,
Good.
but yeah, no, it's all good. Like, I mean, sometimes it's like, I mean, we all like building in the open is exhausting because you get a
Yes.
lot of people that just want token price to go up that don't really have a long-term view or that got wrecked. Like there are many reasons for why everybody wants to make money. Uh, and everything is always too long. And like, so it's of course a lot of negativity we constantly receive, sometime in the public chat, sometime by DM. And so it's definitely a bit of a energy drain and a motivational constraint, but that's part of the game. Like we have no choice anyway but to build in the open, given the history and all that. It would have been much more easy to just do like all those very well funded projects do. They just raise funds, build in the dark for 2 years, then come up with a product that is polished and ready to go, and here you are with zero community, zero complaints to manage. It makes the builder's life easier. But that's also what set us apart. That's also what is very cool about what we are doing. Like, yes, it's painful sometimes, but we have that because we have a community with a lot of people who care, who follow what we are doing, who believe in the vision, in the mission we are trying to put forward, and that's also super cool. Like, the same thing that sometimes drain your energy, also what give you a lot, and yeah, I think it's just yeah, a matter of keep pushing, and eventually this is gonna work. And I think CCL is already gonna start to provide people with a very cool tool to suddenly be able to do something very interesting on Rujira, which is at the end, you are here, like most of those people are here because they want to make money. We are gonna provide you tools that allow you to do that, and not with your Ruji or your Rune, like with actual like a BTC and stable. I mean, with whatever you want, you can use your Ruji or your Rune. But really, the point is not do that. The best thing will be to grow, and then to grow liquidity. TVL in IMM strategies, that will be the biggest driver of revenue, and everybody can contribute. Buy some Bitcoin, buy some USDC, buy ETH or whatever you want. Put them at work. The more we grow that, the more we can capture a share of this flow. We have the chance to get still some very decent flow from THORChain via the virtualization strategy. We just need to build the liquidity to be the counterparty of that. And the more we build it, the more we increase the revenue, and the more the likelihood of Ruji price to go up and everybody to be happy. So everybody has his play his part to play, and yeah, we just keep
Yes.
pushing, and I think we are very close to
In
something very cool.
in your defense, like we're in the depths of a bear market, and like
Yes.
if you were like fully done everything's live, then everyone would be like, why is no one using it? We got to get users and get volume and this kind of stuff. And it's like, if there's any saving grace that it's just kind of in a bear market, it's kind of like no matter what you do, everything is down, right? And so if anything, you can be forgiven that taking the time to do it right. Um, because that's what I'm worried about too. Just with THORChain, like do some when I start doing paid advertising, like it's everyone's
Yeah.
tapped out, right? Everyone's got their head in the
Mm,
sand. No, no, it's going to take a lot of it's much more effort to get people to act and move and do something. So,
mm.
I think the best we can ask for is that you guys do things properly, and it just so happens to be done just in time for the next bull market. That'd be like
Yeah, no,
probably the best
well,
we can all ask for, right?
if we miss the last one, we are indeed in a bear market, which feel like it now. And if it's gonna be another long cycle, like I'm fairly confident that by the time we have the next bull, we will have uh, all
I
the
don't
pieces
believe
in
we're in
place.
this. We're not in this for another 4 years. No way.
Yeah, no, it doesn't
Um,
feel this way as well. Like, I mean,
yeah.
who knows? But yeah, yeah, I still feel like we haven't had this big leg of monetary expansion that we usually have every 4 year or so, whenever all governments of the world need to refinance a large chunk of their debt. I think there is a lot of reason why we could still see things change. And also another thing
I-
that we did not discuss, but
yeah.
that I think can be
Yeah.
massive, is really the coming of chain of tokenized financial assets, tokenized equity, and tokenized commodity. And I think that could be big as well, because suddenly we can open up our markets to all asset classes virtually and offer those crazy, like very good tools to everyone. The issue is that comes most likely with tons of regulations and therefore costs to be able to comply with whatever the people in charge force you to do. So that also means like you lose permissionless, non-KYC part of things. But let's see how it plays out. Like ideally, my dream would be that this is just a job of the Ondo or whoever of this world to issue assets on chain and have the correct records for ramping that. And then once it's on chain, you can trade it permissionlessly. That would be the dream. But yeah, I'm not sure regulators, like there is so much financial lobbying and reason for a lot of people not to let that happen, that probably we won't it this way. But if we do, that would be beautiful. If we don't, then we'll have to see if we can still like offer access to that on THORChain with some maybe extra gating. I hate that, but maybe that would be the way. But in any case, having this type of other assets that just crypto to trade with DeFi tools, I think also has a lot of value. And especially if you think again back to agents coming on chain, and now those agents, they will much prefer having like a smart contract they can interact with via CLI rather than having to try to connect to whatever centralized platform. And this might be also another like a big leg of growth, like as traditional finance move into DeFi rails or into blockchain rails. This can be also big legs of growth for the industry, and then the tide lift all boats, and the dominant crypto assets at least should also benefit from that. Bitcoin at least at a bare minimum for sure, and then us as THORChain and Rujira indirectly, because we benefit from the flow of trading of those assets, and we have this liquidity in those pools. The more the price goes up, the more liquidity there is, the more fees we can facilitate in dollar terms, and the more it increases the fundamental value. So there is also, I think, interesting things happening on that front too. Let's see how it develops, but that could be one.
Well, I'm sharing something right now. This is from Hans. He just posted anything. 3.17 in CCL is all that's left to unlock the 3 million monthly arbitrage opportunity for CCL traders and stakers and bonders. All very exciting. And then the better arbitrage the pools are, the more quotes that THORChain, and in the next message, the more quotes that THORChain wins, the more volume it does, and the more arbitrage opportunity there is. And I'll add my own thing. If we do ADR at 24, we have pools getting deepened by depositing liquidity in the pools. This is even more arbitrage opportunity. I'm very excited for the future, you guys. I think we're on the right path here. It's very
Absolutely.
cool.
I love seeing these tweets from months now. That's a very nice way to go to close. And that's exactly the flywheel. Like we increase volumes, we increase liquidity, we can improve speeds and quads of the base layer, which in turn create more flows, which in turn create more revenue. And I mean, I have in mind like at some point, like first let's build a decent stream of revenue on Rujira, but I also have been thinking about tokenomics 2.0 for Ruji. I think doing something similar to ADR24 with a big part, especially initially, a big part, like maybe 50% of revenue or so. Instead of, we will forget about the stacking option effectively. We are thinking of having two stacking options, one with Ruji single-sided and one Ruji Rune. Actually, Ruji Rune, I don't think it has much value. It creates a reflexivity again between the two ecosystems, and that's not really desirable. What is desirable is to grow the TVL as much as we can. So instead of that, maybe we redirect 50% revenue to do protocol and liquidity, and we create this flywheel where we grow. The more we grow the TVL, the more we can create more revenue, and you keep doing that, rinse and repeat. Like there is some very good things I think we can do with that. And by the way, I'm so very happy if IDR24 works, because I think for THORChain as well, it's
That's why, like, I'm not, people are originally talking about, 2% in POL, and so I'm like, no, guys, like, let's get this up. Those are,
no, yeah, get
I
this up
want to beat them. I want
materially.
more weight, like
Yeah,
Lou
yeah,
Ferrigno,
it's
right?
like it's
Let's get
really
this to
the
10, 15, 20%.
Let's
Let's get some
go.
real numbers in here.
it's really like that's a one marshmallow today, two marshmallow tomorrow kind of things. The
Yeah.
more you delay instant gratification and revenue today, but you increase materially your future revenue, and the more you do that, the more it compounds, and the bigger the impact. So you should do that as long as you can, and before you decide
Yeah.
to turn your business into a cash cow effectively and extract
Yeah.
most of the value out of the ecosystem. The most valuable assets we have is the liquidity we own, on whether it's base layer pools or whether it's AppLayer liquidity. That's literally the revenue is a direct function of the TVL in your pools. You should grow that. This is your commodity. This is your raw material as a DeFi protocol, or as any actually a financial institution in the traditional world. And then the more you can, as long as you can compound that faster than your cost of capital, which in our case is effectively zero, you should compound as much as you can, unless you think you are gonna die tomorrow, and then take it all out and go to Las Vegas and have a crazy party. But otherwise, you should look to reinvest as much as you can, as long as it keep growing, compounding and growing your future cash flow. It's for me, it's a no-brainer. So it's very short-sighted to try to reduce
It
this
is a
number to
no-brainer.
2%.
It's surprising to me that I've had the same conversation 100 times. I mean, it's so obvious to me. It's obvious to you guys as well. I wish someone came up here and just give me their perspective, but it's a no-brainer. This is the time to do this, really, to get this.
Well,
No,
look,
exactly. Actually, the beer market is great for that as well. Okay, so we
It's
can
really
scoop
good for
more of
that.
those BTC and ETH, like especially the big ones. That's BTC, Sol as well, now that it's collected. Like the assets, like I would do also some gold from Tether, XIUT, like all those stuff that are not necessarily stable coins as well. Like just grow your war chest, grow what's going to facilitate more volumes mechanically, because markets are like an ocean with waves that allow you to make money when you surf them.
This is the thing, like the Bitcoin pool is like, I don't know, 25 million. I think the ETH pool is around 10 or 12 or something. And then stablecoin pools are all like a few $100,000. And I'm sorry, guys, I don't do the math. I haven't played with this. I don't know, but maybe pragmatic. Like having the Bitcoin pool at 25 million and a stablecoin pool at 200,000 is a huge imbalance. Like, wouldn't the trades be more efficient if both pools were the same size? Like, because isn't the just because we have 25 million in Bitcoin pool, we're now limited by that $200,000 stablecoin pool.
Definitely.
This is our limiting factor, and it just basically effectively reduces that $25 million pool down to 200,000.
For two legs swaps, absolutely. Like your lowest liquidity pool is the common denominator for
Well said.
for your swap size. That's
so this is
but
why
that doesn't mean having those two pool at the same size will increase necessarily revenue.
fair.
Actually, it depends.
Increases speed, generally speaking.
It will increase speeds, like you could facilitate bigger legs from USDC
Bigger
to
spinning
BTC, for
swaps.
example.
Yeah.
But then, so because on THORChain, on the base layer pool, everything is priced with a rune, which is a crypto token. So the volatility, like the price of rune, will be correlated fairly highly with Bitcoin and ETH and all that. And so that's actually would not maximize what you want. Like you probably would be making more money from your stable pool to rune just because the volatility will be higher. So you just mechanically churn more volumes. But that's so at the end, yeah, what you want is probably two assets that you want to hold for the long term that are not correlated. So there is a pull together. So there is a lot of volatility, and that's what maximize volumes. And it's so yeah, I think having bigger run stablecoin pools will also be good for revenue. I think.
I love it.
Yeah, and I'm pretty hot on trying to get like 50 new pools.
Yeah,
Like,
please
and
do
it's
get more things.
I'm
Get gold.
trying.
Like
Look,
I have people like I know people close to us, like work with us. They want gold XIUT. We want to create. Imagine a PTC gold pair on the AppLayer in CCL.
I
Like this is super
yeah.
cool.
So like it's frustrating because when I bring this up, some people are like, "Oh, but those pools, there's gonna be no volume, nobody does it." Blah blah. I'm like, well, you gotta look at the second and third and fourth order effects, right? Like, if if we have these pools, we can start tapping into those communities. And fine, they might be small numbers on that particular token, but doesn't mean they don't own Bitcoin or Ethereum or whatever larger cap that they will now trade on THORChain. And so I get like every pool we have is a lot of diminishing returns, 100%. It's just like Home Depot. Every new like screw or hammer or whatever they add isn't going to change their business, but and you could probably, probably half the items in the store, they make like a little bit of money on it, right? And they're like, and the bean counters will say, "Oh, we should get rid of half these things. Then we'll make more money per square foot and blah blah blah." Right? It's like you don't get it. The whole reason you make money in the first place is you're a one-stop shop. That you go to Home Depot, they got everything. If it's not there, you're not finding it anywhere else. Maybe you have to go online and search it some specialty, right? But you just know it's all there. And so that's what we need with THORChain is just it's all here. And so I'm
So
trying, guys. I'm trying to push this through and
that
yeah.
would be great. For me, like again, I middle ground type of things. Like I will not go into too small assets. That's not gonna do any good. That's actually, especially if you pair it with Rune, it's gonna create constant selling
Just the top
pressure.
100. The
But
top 100
exactly top 100. Like especially like go yeah, don't like stuff that if you can get tokenized stocks on it, if you can get gold, like stuff that are not necessarily crypto related, I think there is a lot of demand for that as well.
yeah. Like a simple one is RLUSD, Ripple's dollar, like the Ripple dollar. We got to
Mm.
get that pool going. Like, and
Yeah, actually,
so
this one is good because also then we can like we have a good relationship with the Ripple guys. Then you have been doing
i-
like a tremendous job at
They're gonna
creating
be
the
in
bridges.
Las Vegas. So I'm gonna do my
if
best
they're
to talk to
XR,
them.
if you're an
That's
XRP maxi, this will be the only place on a DEX to swap
Yes.
XRP for RLUSD, right? And
and
it's
then
like,
we can offer a USDC XRP consolidated liquidity pool on the AppLayer, and you can have
yeah,
like stablecoin returns on your favorite
yeah.
USDC, yeah, your
And
favorite local stable.
when people are curious, I say 50 new, like the top 100, 50 pools. I'm talking about on chains we already have. So like on Ethereum, Solana, and basically you just look at like the top 100 by market cap, top 100 by volume. When you cross-reference those two lists, you get 30 tokens right off the bat. Boom.
Yeah, that's
Those should be
great.
we shouldn't have to think. Those are
Yeah,
no
yeah,
brainer.
no,
We just get them on,
absolutely.
right?
Anything in the top
And
100 we can do, it works. And
yeah,
also there is also, I think, a minimum size you want to have below, because that's also the other thing. Below a certain size, it will not be interesting for arbitrager to make the arbitrage
yeah,
because
it's I'm pretty
the price
sure
impact
that
will be too big.
the min is like 50 to 100 grand. And
Yeah,
I've only
yeah,
run the
some,
numbers once, you guys. So, but basically, if anyone's curious, so you can use AI to come up with SQL queries on Dune. It's pretty simple. If you guys want to go play with it, do some vibe coding. You heard how dumb I was earlier. If I can do this, you guys can do it. So I just ran some numbers on the pools like the last 90 days, whatever, and the link and Trust Wallet Pool, TWT, kind of stood out to me. Not because they're like making a ton of money, but they're small and on like a percentage basis are keeping pace with the Bitcoin pool. And like right around the same, like the link in Trust Wallet pools on a percentage basis are just as valuable to us as the Bitcoin pool.
Yeah,
And you guys
exactly.
may think, "Oh,
That's what I
right?
call
What
the
are these tokens? Who cares about them? Whatever." And it's a
no,
small
no,
pool,
it's
but
super
that proves the
important.
point. Yeah.
That's what's so in the analytics I have design that were live for a short period, and then we lost them for. I mean, we had to redesign certain stuff, and it will come back. But one of the key metrics I was tracking is what I call liquidity utilization ratio. That's how much of every 24-hour, whatever period, you churn the TVL, and that's really what you want to maximize. There are other, I mean, especially in our case, it's not the revenue is not a direct pure function of volumes because you also have the arbitrage profits that are being captured. But overall, that's really what you want to, Eva, what you want to maximize. It's you have TVL, and then how efficiently this TVL is being used. And the more efficiently it's being used, the more money you make per unit of TVL, the more you are using
Yes.
properly your raw material, which is the liquidity in your pools.
Yes. This is why I want to create a liquidity pendulum, for our POL. So Richie just came, his mic, I don't think was working.
Oh.
Um, but if the protocol is going to own this liquidity, rather than just sitting there being static, let's move it around where it's treated best. Let's be efficient with it.
Mhm.
And the pushback is because all this POL we own is in pools with synth leverage.
Mhm.
And if we withdraw, then we lock in losses for the LPs, right?
Mhm.
And so I can appreciate that. Um, but if we're only talking a few percent, it's not like the end of the world, right? And like that few percent pulling out of some of these big pools could make a big difference on some of these, seeding these other pools, 30, 50 new pools. And, that could help kind of kickstart things, get us to some new volume, some new communities, all these new features, pairs on AppLayer. Um, it just, it gives us more ways to win. Doesn't guarantee us, but at least we're trying, we're doing something. We're like, it's just, um, tweaking things, just sitting on our hands and just waiting that's not a viable strategy. And this isn't doing something for the sake of doing something. Like it makes sense to add these pools.
Right.
Like there's nothing, if
Absolutely.
yeah, I don't see what the downside could be. I mean, the
No,
worst that happens
it's
is
really, I think the only issue here is at the end is there is limited liquidity. So if you just reshuffle around liquidity, existing liquidity, you can get for sure some improvements by allocating more to the pools that have the highest utilization ratio. But then net in, you want the pool to actually grow. And currently they are not growing because there is not even any fees compounding inside them anymore. So that's why also ADR24 is very important in my view. But
Yes.
the part on Sans, I mean, this like Rulers is more of a lawyer to tell us what to do here. But yeah, I mean, this is a real problem. I understand why there is pushback around that because well, if you realize a loss, if you force Sans LPs to realize their losses, maybe there are some implications that could be negative for. Well, at
s-
the end,
uh,
it would be a decision of another operator, I guess. But there are still people close to the protocol that will implement those changes that could be at risk, maybe. Uh, I don't know,
so
like, but yeah, I guess it's a.
I see Coke made some comments here. Give me a second. Um, by the way, 13 million. This is supposed to be Bitcoin pool, 5 million ETH. And then he goes on to say, boomer alert. I'm gonna come back at you hot here, Coke. If you're pulling those numbers off of THORChain.net, you got to times it by 2. And I've actually been meaning to ask Huririn why he's doing that, but that's only
Divide by
showing
two.
no times 2.
Yeah, because I only show the asset
He's
side.
only
That was always weird for me as well.
he's not
Uh,
yeah, he's only showing the Bitcoin side of the pool. He's not showing the Rune side.
Right. Okay.
So
Yes.
times those numbers by 2. And then the stablecoin pools I was thinking of, you're
AVAX?
right. Tether and USDC on ETH, I think, are decent.
Right.
But the stablecoin pools, some of the other more esoteric stablecoins are really small. And those pools are, from a percentage basis, are our most profitable. They're killing it for us. There's 3 stablecoin pools that make way more, like 4 times more money than the BTC and ETH pools. So that's where that's where our liquidity should go. The capital should go there where we're making more money. So that's what I was referring to, Coke. So
He was. I think the boomer alert was
for Richie.
the mic problems. Yeah.
Hey, guys.
Is he there? Hey,
How's it going, Richie?
Hey,
Richie.
can you hear me? Okay.
We
Hey,
can
look,
hear
I've
ya.
just got something really quick to say. While you guys are out there fudding crypto and talking about a bear market, we've got something really cool. Next week, we're going to be posting Pragmatic Monkey's Founder Spotlight interview. It's going to be live on the blog. I had an insane conversation with this guy. He couldn't have said concentrated liquidity pools enough in this whole podcast. And we're going to dive into that more. So it's something he's super bullish on. Pragmatic Monkey, that was absolutely fantastic to do that interview with you guys. I'm not going to disturb you. I just wanted to get that out there because it will be live on the blog and everybody likes those founder spotlight interviews. Thank you, Pragmatic Monkey.
Let's
Take care,
go.
guys.
Thank
See
you.
you
Thanks.
in the next one, guys.
Thanks,
See you.
Richie.
Hell yeah.
Bye-bye.
See you.
That's what
That
I'm
was
talking
great.
about. That's how you make an entrance into a friggin'
Yeah.
live show.
Yeah, I love his energy. It matures.
Yeah.
Love it.
That Richie's awesome. We love that Richie.
Could you
Right.
imagine his energy if he got on? It worked the first time he got on. That's after being diluted 5 tries.
You're right. Yes, there's
Um,
definitely decreasing returns here.
I'm glad he came. Thanks for coming, Richie. Like guys listening, we want people to come up. Just because we're not
Yeah.
doing spaces anymore doesn't mean we don't want people coming up. So hopefully that link is getting around you, and you don't have to show your screen. We'd like you to, but we understand if you
No,
don't
you
want
don't
to show
have
your
to.
face. You can have the camera off. You can just talk. So please don't be shy. Please feel free to come up, you guys.
Yes, I agree with that 100%. I know we're coming at the 2-hour mark. It's been an awesome conversation. Great job, Pragmatic Monkey. Thank you for handling the hard question. Well, I think it's a hard question. Maybe it's easy for you, but I'm not smart. But I do have something though. I just want to make. I know this is happening, but I really want to hammer this down. So I think this is super powerful. What's happened on THORChain? This Hugin thing, man. This Hugin thing is incredible. I mean, the amount of code that we're shipping now with the AI assisted, Hugin. I know there was talk about the AppLayer getting involved in this. And I think we should go maximum with these tokens. I don't care how much money it costs. The compounding effects of shipping maximum code, having Hugin, I think it's going to the money we spend today. It's going to have incredible, profound. But is Hans getting involved? I hope this is helping Hans.
So we are playing with it, but Hans and Starkweed as well, and Zephyro, like most of our devs, like they actually are not a big fan. They find it more of a distraction. It looks amazing from the outside, but when you are like a proper like a developer who really knows what he's doing, and you see the type of feedback it posts, sometimes it has valid points, but a lot of time it's just like completely missing context and hallucinating. And I think it works also like the base layer in probably a better spot for that, because it's more mature, it's more like established codes. But for the app layer, like so far,
that makes sense.
It has been more of a distraction than anything. But we are playing with it right now, and I think it's only gonna get better. So it will definitely.
Like you guys are inventing like new things, right?
Yes.
Whereas like AI can go and
that's true.
Say build a website because there's thousands of websites.
Exactly.
It can go scan and crawl and copy and paste. Whereas AppLayer is brand new. There's nothing to copy and paste. You're taking what's going on in here and making it a reality for the first time.
Absolutely. And there is even less to look at if you code in Rust and use CosmWasm. than if you do with Solidity. And that's what happened. Like, so initially, like, we were pressured a lot by GP to expand the team. Like, if it was going to magically make things accelerate, where actually what it did was lower the path, because we're being distracted all the time by having to handle other people's codes, which take more time usually than actually, especially for us doing his own. And what most of those people were doing is effectively using AI to generate stuff, and you end up with crappy like replicate of the consolidated liquidity implementation of Uniswap, but in Rust for Rust for cross-border smart contract. But it's absolutely useless. It's not. It has zero context of what is a feed, what is a base layer, how the order book works, how the feed piece together. Like, it's like a standalone piece of code that works on itself, but it's just a replica of something that already exists on Ethereum and poorly built. It's just you cannot, if you limit, like, you can't innovate with it. You can't really, like, it's great for what I'm doing now, like building my little backtester for someone like me. It's amazing. But because there are tons of backtesting tools available, I can do tests to verify. It's just building something on top of something we have built already. But for original thinking, exactly as you are saying, Kenton, like, you cannot, it can't make up for human creativity, at least not yet.
This is. Do you want to go, Danny?
Well, I was going to say, and when Rujira gets going, their swap volume, we have data to choose from. Then maybe at that point, Hugen or something like that can then parse data and figure out maybe where there's some optimizations we made. But yeah, I didn't realize, I didn't think you guys are actively building, so there's nothing. It can't help you with that. There's just no way.
No, but there is code like committed and to review, so it can still like review stuff and do quality of life type of assessments. But yeah, so far the ratio of good to bad is not worth it yet. But I think it will eventually. Also, like, once we have more time to just focus on the nitty gritty to.
This is for me. So it was frustrating. Why one of the reasons I had let Reggie go, when I'm finding out, this is why I'm behind on some things. He was just using AI for everything, and
yes, I think that's what most people do.
And
it's like, horrible.
Now I got to go back and I got to fix everything, and like, it's just. And then the things he told me that were done, or that this is all he could find or do. Then I go back, look and do it myself. Actually, it can be done, and I can find it, and whatever. And all he was doing, I'm sure he's asking AI. And so what I found from like a creative point of view, so like for example, like creating the new THORChain website, you can have all the copy, then upload that to AI, help me find my grammar mistakes, clean this up, clean that up, whatever, right? But to create it first and then go correct it ends up being a lot more work. And then same with, like, we're talking about these articles we want to do every week. We got the Lemur Labs guys doing them. That was one of the problems before, is that I kept getting these articles that I had, I was reviewing them to make sure they're accurate, correct, whatever. And I'm like, God, I'm spending hours like fixing this. And I'm like, this is not, who's writing these? And obviously then dawned on me, it's AI. That's why it's so like, it's kind of half right, kind of not. And like, I'm like, this is wrong. This is just messed up. And so the Richie and the Lemur Labs guys are great. Their contents, I think it's great. I hope you guys like it. But they understand THORChain. They know how to make it make sense and kind of try and dumb it down. And so one, we can tell generally, right? Still tell if something's written by AI or a human. But also it's there's already backlash. There's already websites and publications and whatever who have AI checkers, and they do not want content that's AI generated. They're like purposely scanning for it and blocking it, and may even somehow penalize you. So, if anyone's out there wondering, like, Kenton, why, working on, to these article a week and all this content, just use AI, just create it all. And like, no, they're already putting in places to stop that. It still has to be human, majority human created. And so, yeah, we can only use AI as a tool to help. It can't replace the human. It can augment the human, but it can't replace us. So
Absolutely. Yeah. He cannot
yeah.
have original thinking. Like he can only write about THORChain what he has collected about THORChain. And yeah, it's just gonna be always the same platitudes repeat. Like there are a few accounts that actually do that already, and it's so obvious. Like you feel like the person that published that either really don't care or don't understand. I don't know, but it's yeah, you can really see it in a lot of posts. It's the
Yes,
quality is not
totally
there.
agree.
You
Yeah.
can't, like if you want to do an interesting piece of thoughts, you have to put your brain into it, and based on the context and the data, come up with something original. And no AI can do that, at least not yet.
I think Kenton really like you can't it's really hard to take someone who's not like been in the weeds like us and just make them be able to like you really got to be in like Richie and those boys like they are been in the weeds for a while, they understand, and that's just a knowledge base that just takes years to develop. And it's taken me to this point just to understand Rujira and Finn and all the fucking whale names you guys use for all your DeFi primitives. That gave me I hate whales now because of that. I'm telling you, I couldn't remember the
Poor
Ghost
whales.
and Bo and Finn. I'm like, I hope whales go to extinct. You know what I'm saying? But it just takes time. You know what I mean? It takes time to learn these things. So, Kenton, that's why I'm glad it's you now, and I hope you keep doing it. To a ripe old
Yeah,
age,
I'm going to.
85 years
This
old.
is yeah. It actually I'm a weirdo. Like I like cleaning things. So like I want to clean up THORChain on the internet, and so
Love it.
yeah, it's
You're like
I
at the
I
Bateman
like
with
this metaphor.
with his card, his business card. The
yeah.
Bateman. You want the basket, and you just
Professional
like,
cleaner.
yeah,
Yeah, Canadian psycho over here. Yeah, that's right.
I like it.
Um,
I like it.
yeah, I got
Oh,
a
man.
prostitute on all fours on my bed waiting for me right now. Um,
You're making her like, make your bed fold like perfect and stuff, you know what I mean? And
did you guys hear about what's his name, Army Hammer?
I don't know who that is.
It's a huge tangent. So I live in Cayman Islands, right? So Army Hammer, he's a actor. He was on a few big movies. He was remember the Facebook movie with Jesse, whatever his name, and the Winklevoss twins was Army Hammer. And they just
Okay.
duped him. He played the Winklevoss twins. He was on some other movie with Henry Cavill, with Spy versus Spy or something. I don't know. If you saw his face, you might recognize him. Anyway, but he grew up here, and his family's Caymanian, and so he's kind of an infamous guy on island. And he's a real deviant. And his marriage fell apart. It was kind of like it kind of got in tabloids and stuff, and because he posted this video of him showing on Instagram, he posted a video like doing like a walkthrough of showing his apartment in Cayman Islands and like the balcony and everything. Walk through the hallway, walking through the house, all that kind of stuff. And as he walks to the bedroom, there's this girl in lingerie on all fours, like on the bed, in doggy position on all fours. And he just walks past her, just keeps showing the tour. Like it's just like she's part of the scenery, right?
Part of-
Everyone's
part
like,
of the house.
what
Pretty
the
true.
hell?
She
is
gets
that?"
paid to stay there.
And so you couldn't see her face, but everyone knew she was like some local Cayman. She's like Miss Cayman from a few years ago or something. Everyone could tell it was her. And this guy is, I don't know, he's begging to get caught or whatever. But then his wife divorced him shortly after that. But it turns out he's like a real like he wants to control women and like have like American Psycho, like just have them do weird, crazy stuff to exert his control over them. Yeah, it's crazy. Anyway, sorry, weird, crazy tangent for you guys there.
That's great. That's
I'm
great.
not doing that, by the way. I'm joking.
The
Kenton,
American
take your
Psycho of the
camera and
Caymans.
swivel it right now. Take your camera and swivel it. I need to see what's going on. You know what I mean?
Yeah.
No,
Something
what
waiting
gets
in your
me off
bedroom.
what gets me off is a good vacuum.
Oh my god!
Getting the THORChain spelling right. Gosh, I've been so on. Check out Gem Wallet. Check out their website. I was just in touch with them. I'm like, guys, you got to fix the THORChain spelling. It's all over the website, spelled wrong. So
I like it. Clean the internet. THORChain on the internet. I love it.
Yeah. So
It's important for the
funny.
machines as well. Well,
Well, I don't see any
it
other
was a
questions,
pleasure.
guys. I think we'll end it there. What do you say, guys?
yeah,
Yeah.
yeah,
Okay.
yeah. I think so.
Kenton PM, thank you so much. This has been a great live stream. Had a lot of fun. Wild ending. That's how we like to do it here. Let's do it again.
That was good.
Okay.
It was a pleasure, guys.
Yes, sir. Yes. Okay, guys. So, this Saturday, we're going to have Matthew Carano. I hope I'm saying that last name correct. I'm really sorry if I'm not. Matthew Carano, editor of Brave, The New World, Liberty and Technology. I'm really excited to talk to him. Kenton, good job scooping that one up. And then
No, that
next
wasn't
Thursday.
me.
Oh, was that Richie and the boys?
It might have
Who-
been, yeah. Maybe Lemur
Yeah.
Labs guys.
Oh,
Shout out to
okay.
you guys. Yeah.
But shout out to them. I had a space with them, and then I think they reached out from the THORChain account. That's what it was. So good job, guys, following up and getting them. Excellent job, guys. Just a reminder, guys, if you want to see the TLDRs on this, please follow Ray Analytics on X. He does these recaps. He's also helped Kenton with the analytics and with Masari and stuff. So that guy's a great friend of ours. Please give him support. Please follow him on X. Really appreciate it. Guys, if you want to become a node operator and need some help, reach out to @Runtard on X. He will help you get set up and find bomb fighters. You can also reach out. I'll help you as well as best as I can. Okay, guys? But please reach out to Runtard. And always remember, guys, the views expressed are solely those of the hosts and guests. Any action taken based on this is your own risk. Past performance is not indicative of future results. And with that being said, I hope you guys have a good remainder of the week. We will see you Saturday. See y'all then, guys. Bye-bye. Take care.
Bye, guys.
Bye.